Hello everyone, welcome to the first live update of the week. I'm David Jones from Capital.com, and we do these typically 3 times a week. So Monday, Wednesday, Friday, a quick catch up with what's going on in markets and some of the big levels and the events to watch in the week ahead. I think it could be a really interesting week this week. There's a lot going on this week. It all really starts from tomorrow. It's a bit of a slow start, but we've got European consumer confidence numbers out tomorrow afternoon, 3 o'clock. Then Wednesday morning, UK inflation. So inflation is expected to come in, CPI number around 2% for the UK. Wednesday night, 7 o'clock, there's the minutes from the last Federal Reserve meeting. So the meeting of the US Central Bank, the minutes, what they think about the economy, all that sort of stuff, normally pretty closely watched, those numbers. Thursday morning, German GDP. I saw a story on the BBC website this morning just about the state of the German economy, so that could be interesting. And then Friday, UK retail sales. And of course, in amongst all this, we've got those European elections on Thursday. So it's a big week. And for the pound, it's still very much all about what's going on, I think, in the political world, rather than in what's going on with the economic sort of reality. But anyway, let's get into it. Let me just drag the trading platform across. What we're going to do today, we're going to start looking at oil, because oil this morning, briefly, it seems so far, did push up to its best levels for the month of May. Okay, so oil has been arguably a little bit flat during May, but I think we had news saying that OPEC, the oil producing consortium, are going to carry on with production cuts for the rest of this year. So that's a simple supply and demand story. Less oil getting produced pushes the price up a little bit. And you can see the move. If I just zoom in, let's just take the RSI off for now. So the price of oil closed on Friday around about 62.80 a barrel on Friday. This news clearly broke over the weekend. So it opened last night in Asia trade, 10 o'clock UK time last night. It opened about 80 cents higher, 63.60. We have pushed higher a little bit, had a look at 64, and it's come back again. So I think that's going to be an interesting market to watch this week. And it's really, if we go back to the dailies, first of all, for oil, clearly that recovery, let's bring the RSI back into this. Clearly that recovery from December last year, when it was down at 42 and a bit dollars a barrel, that recovery is still going, but it's lost a fair bit of momentum over the last month. You know, if we picked up on that trend, you know, we've got the trend running off the lows, looking arguably, that's not very well drawn, something like that. We have fallen out of that trend line during May. But for me, you know, just because a trend line breaks doesn't mean the market is going to go all the way back down to the 40s. So I think for me, that trend is still intact, but maybe we just go up at something of a lower rate of knots. You know, clearly last week, a couple of weeks ago, the $60 a barrel mark proved to be a floor for oil. If we flip this back over to the hourlies, you know, we can see that sideways trading since 60 was hit, and on the upside, sort of 63 and a half was being a problem. Towards the end of last week, we did see it start to push up through these highs. So I think it's interesting what we've seen overnight, with it gapping higher, trading to 64. So its best levels since right at the beginning of May. So I suppose the aggressive trade here, we filled a big chunk of that gap. I think the aggressive trade, if you thought oil was going to move higher from here, is to be a buyer with a stop. The closest I would want my stop on this is underneath the Friday low. So the Friday low is what, 62.70. this level here. So I think that's a level to watch for the rest of the day in oil. It's currently trading at 63.20, so we're about 50 cents above that high. So I think it's going to be an interesting market to watch this week to see if it can continue with this breakout. I mean, clearly looking at the charts, next big hurdle just shy of $65 a barrel. But let's see what this week brings. And I think, because clearly we need two plans here, because no one's got a crystal ball. I think if we start breaking below Friday's low of 62.70, then the risk is that it ends up looking like a failed break. We see more people looking to sell out, and we see the price under pressure. But for now, at the moment, coming into this week, it looks pretty bullish, I think, looking at that move overnight. So an interesting market to watch. Let's see what happens. While we're on commodities, let's take a look at gold. It's been, if you're long gold, like I am, it has been a somewhat disappointing end to the last week. It did look like it was finally getting a move on, pushing above 1,300. But as we've got used to seeing over the last couple of months, or last 3 months now, it really hasn't been sustained. So if I pick up on this, I'm going to pick up on a couple of trends for the price of gold. We've been in this, I suppose, what we could call a correction since Feb, looking something like that. Last week looked like the breakout. We had that surge through, and then we've given it all up and more, and we've gone back to trades, back to where we were right at the beginning of May. And then on the other side, we do have this recovery, which we've been picking up on for a while now. There is still just about still intact in the gold price. So I think, if it's going to bounce from anywhere, it needs to get a move on, really, if it's going to continue this trend. So for me, let's round it up and call it 1260 is really the big level to watch for gold. It's currently trading at, what, 1274. So we're $14, $15 above that level. But if it starts slipping below 1260, it'll be on new lows for the year. It starts falling out of that trend from last August, and it looks like it's under a little bit of pressure. If we're looking at the RSI down here, this is adding some weight to an argument for a bounce. We went oversold on the RSI. This is a 10-day RSI. Went oversold the end of April. The market did, let me just zoom it in. The market did push a bit higher, then pushed a fraction lower, but we had higher highs on the RSI. So this phenomenon is known as bullish divergence, where the market makes a lower low, but the RSI makes a higher low. So it can be a suggestion that the weakness is running out of steam. And we did see that for about a week, but we're back here again. So I think it's another week where it's crunch time a little bit for gold. And, clearly we've lost a lot of momentum over the last 3 months. That big trend is still intact, but we need to see strength start coming in pretty much here, really, to hang on to that trend. So I think that's going to be another interesting one to keep an eye on. While we are talking about alternative currencies, let's have a look at Bitcoin. So let's bring up the Bitcoin chart. So we've been looking at this a lot more regularly now over the last couple of months or so, because of course it's sparked back into life. Let's just remind ourselves where we are again. Let's get rid of the RSI for now. So it started getting interesting back in April. We've seen plenty of little rallies for Bitcoin over the months, but nothing that substantial. But beginning of April, we saw it break through the late November highs, really get a move on. And unlike many of the surges that we'd seen in Bitcoin, this one, all the way through April, managed to actually hold on to the gains. We didn't see it just flop back into the range. And then we've continued to build on it. Traded up to 8.4 last week, 16th of May, and chopped around since then. And I think it's interesting up here. I've done a longer video on Bitcoin last week. So if you're watching this video, if you go to the channel afterwards, there's one I did last week looking at sort of the medium term for Bitcoin. And I still think it's all about trapped buyers, I think, for Bitcoin now. We've had this, what felt like quite a parabolic move again, where the price doubled, sort of feeling a bit like it was in late 2017. But clearly there are plenty of people who would have bought Bitcoin on the way up in late 2017 and held onto it because it was going to go to 1 million, of course. There'll be people who bought on the way down in 2018 and held onto it, waiting for it to go to 3 million. And they've been disappointed. So I think we are running into an obvious area now where there are, for my money, old holders of Bitcoin who maybe didn't understand the technology, but think it's just free money, lost half their money on paper, and are now only too keen to try and offload at break even. So I do think this could be a problem area up here. So let's just pick up on the levels first of all. I think the obvious one is actually where it's stopped now. It's those old highs from July, around about 8.5, pretty much up there. So we have seen that be something of a barrier. I think if we break 8.5, then 10,000 looks like the next obvious target. From there, from a year ago, 10,000 up here. And again, I'd expect a bit more back and forth. So for now, if we flip this over to an hourly, that recovery is still intact. We had quite a lot of volatility on, when was that, Friday, and a bit more over the weekend on Monday. So we have, we've seen it swing around in a pretty much a $2,000 range over the last few days. It is, it's a crazy market. It's a 25% swing on Bitcoin over the last few days. And I think 8.5 is clearly the obvious hurdle here. But that recovery is still intact. So for my money, weakness still looks like a buying opportunity. The only problem is, and it's a big problem, is where do you put your stop loss on something that is this volatile? For me, what would be interesting over the next couple of days, if we see this level hold the price and stop any progress, and we see it drift back off to the 6/8s, do we see the buyers come back in? So for me, if I really wanted to trade it, that would be the trade I'd be looking at this week. Let's see if the price comes under some pressure here. Drift back. We've got a logical point for a stop loss. The closest I'd want it, the other side is 6,500. And it's all about where you buy in. The flip side to that, if we burst out to 8.5, then I'd probably want to be a buyer. And then again, we have the same problem. Where did your stop go? So I think it's still positive, but I'd rather see a bigger sell-off again, back to the lows from last week, and then have a look at it there as an opportunity. But clearly, Bitcoin has massively woken up in the last couple of months or so, and I think it's an interesting market once again. But it's all about these trapped buyers, I think. Right, let's get into more traditional markets. We'll look at the currencies, then we will do stock market indices. Then I'll have a look at any questions that people have got. So if there are any markets that you want looking at, just put it in the chat on YouTube. So the pound, it has been a dire few weeks for the pound against the dollar. So it peaked in May, just shy of 132, and last week it traded down to about 127. And I think, as I'm sure we're all aware, it's a market driven by not so much the fundamentals of the UK economy, but what's going on in UK politics. We've got these European elections on Thursday of this week. It looks like the Brexit party are going to win a lot of ground at the expense of the two other traditional parties, the main two parties. So it's a bit of a lot of the UK electorate using that as an opportunity to stick up two fingers to the Labour and Tory parties. So there is this political instability. There's talk of getting a replacement for the Prime Minister. It's all up in the air, and it's not helping confidence towards the pound. So it's been really battered. But we are back to levels where I think it's interesting. Right? If the thing is going to turn around anywhere, then here we are. So maybe this week ends up being turnaround week for the pounds. So we're back down to levels. You can see them almost back down to the lows for the year. So the lows in Jan, second week of Jan, were around about 127. We had that spike on Jan the 15th, which I think was when Theresa May, if we can cast our minds back that far, did the first Brexit vote in the Houses of Parliament and lost it. So that's 126.70. So 126.70 to 127.00, I think, is the big level to watch for pound against the dollar this week. I would not be jumping in today. and buying it, because if we flip over to the hourlies, you can see just how weak it is. But and look at it, it just has been constant drip, drip, drip of this market moving lower. Sets a low, stabilizes, breaks the low, sets a low, stabilizes, breaks the low. And that's how we ended last week. So I think what will be interesting this week is how it treats last Friday's low. So last Friday's low was 127.10. We've seen a bit of a bounce today. Let's see what happens over the rest of the week down here, over the next couple of days, whether we can see some sort of stability coming in. But it is still weak going into this week. But if it's going to turn around anywhere, then maybe it starts building a base down here. Very oversold on the RSI. You can see this 10-day RSI. This is the most oversold it's been since, actually, we've got to go back almost back to here. Back almost a year to see it this oversold. But it is oversold. But, you know, in when we have strong trends, that can often not mean much at all. So there's a pound against the dollar. It could be an interesting week. Euro dollar, similar sort of story, really. You know, we've been talking about this euro, just the lack of volatility. First of all, you know, we're not getting much in the way of daily swings, and we just see it constantly, just, you know, gradually drifting lower. You know, so this is where we are on the euro. We've got this low from April at 111.10 near enough. Let's call it 111, which is, I think, a 22, 23 month low. So it's a big low. But the market just continues to drift lower. So I think if we're going to shake this weakness off, we need a decisive move through 113. Perhaps this week, again, we'll see maybe a bit of a euro bounce this week ahead of this 111 level and see it push higher. But it just can't hang on to any recoveries at the moment. But you can see what a turnaround area this has been over the last month. There's the lows, 111.10 lows. We had a bit of a spiky low beginning in May, 111.35. Let's see what happens. Maybe we get it squeezing a bit higher this week. But yeah, it's not the most exciting market at the moment. And then finally, stock markets. So I think, you know, these are still very interesting. A bit more volatility last week. Let's just pick up on this. Let's pick up on the S&P 500 first of all. So the broader US market, just to remind ourselves of the big picture. So the big picture looks like that. So we've had this recovery, this frankly quite astonishing recovery since the December lows, where the market went from about 23.40 up to 29.50. We have seen it just pretty much in corrective mode through much of May, but we've seen the bounce back come. And for now, you know, again, I think a bit like the oil price, it's fallen out of that trend, but that doesn't necessarily mean that trend is over. So I think we have to be perhaps leaning still to it having another push higher from here. But let's take a look on the hourlies. So I think going into today, we did have from May the 13th a little recovery chugging along, looking something like that. So we're a week into this now. So for the short term amongst us, we're a week into this little recovery. I think an obvious level to watch going into this afternoon, Friday's low. So 28.50, near enough. It held the market up in early trade on Friday. The market did rally, but sold off towards the close. But again, it held the market. So we've still got a few hours until the official open. But I think 28.50 is one level to watch. And after that, the lows from the 16th of May down around 28.35, 28.40. So for me, we're seeing it under a little bit of pressure in the overnight market, but still looking for it to maybe have a little squeeze higher from here. Let's take a quick look at the Dow, then we'll bring it back to European markets and have a look. So we're seeing, you know, similar sort of stuff going on with the Dow. You know, we had the low from Friday in the out of hours market, about 25,600. Came back down to 25.7 near enough towards the close on Friday, and that's where we are at the moment. So it's going to be interesting if we're opening around here this afternoon at 2:30 UK time. You know, we're testing those late Friday lows straight away. So it could make for an interesting session. We'll take a look at the DAX and the FTSE, and then I'll go through some of the questions that come in, and we'll take a look at those. Right, what am I looking for? DAX. Here we go. Let's bring up the DAX. So out of the European indices, this is the most popular traded market with our clients. And I think, quite rightly so, it's a lot more volatile than the FTSE. So it does swing around quite a bit. We do have German GDP data out later this week. So it could be an interesting week for the DAX. But just to remind ourselves where we are, we're still in this recovery off those lows, chugging away. Bit of a correction into May, holds above the mid-April lows near enough at 11.8, and we're just sort of here now. Sells off a bit on Friday, and we're here. So again, very much dependent, I think, on what the US markets do this afternoon. But let's just pick it up and look at the levels. So it's maybe a bit of a messy opening so far today, but the big levels to watch again. I think that those Friday lows were sort of flipping around there now, around about 12,140, that sort of area. Market's currently 12,164. So let's see what I think is. We need to see these US markets stage a bit of a recovery this afternoon, but you can see how important that level has been, that 12,150 towards the end of last week, and we've had a little look through it today, but have bounced back quite strongly. So let's see what this afternoon brings. And finally, the FTSE 100. So the FTSE. So I think the FTSE would have benefited a little over recent weeks from the weakness we've seen in the pound. So, traditionally a weaker pound is good for the FTSE 100 because so many FTSE 100 companies derive their earnings from overseas. So a weaker pound flattens their profits. We've had this recovery that's been going on again since late December. The RSI has been a bit weird throughout May, sort of dipping into oversold as the market's been selling off, but not really having an extreme reading. In common with these other markets, it's bounced back. Let's flip it over and take a look at where we are. And again, just having a little push below those Friday lows, So again, I think we're just going to mark time, it feels like, until these US markets open. And then the key thing there is, are we going to hold the lows? But for the FTSE, that recovery again over the last week still appears to be up. So really looking for strength to come in now. On the hourly RSI, we went oversold this morning. The aggressive trade here is, well, let's see how the current hour ends. We're still in this hour, the latest candle here, but I suppose the aggressive trade is to be a buyer. The low for the hour so far is 7,300, so stops, maybe 72.75, or the more conservative might want stops the other side of 72.50. But it's going to be interesting to see if this whole area holds. So that's it for our quick run through. So I think the interesting market to watch today is oil, because it started so strongly off the back of OPEC confirming it's going to restrict production. But then this afternoon, I think it's going to be an interesting afternoon for stock markets, because we are in US markets, in the overnight market, we are tickling back towards those lows from Friday. So let's see if they can hold. Right, let's get into some of the questions. So we've got David saying, can we have a look at BNP Paribas? So let's bring that one up. French bank, Le Banque Française, as they say. That is the extent of my French language knowledge. Right, let's bring up the dailies. Here we go. It's this recovery. We've looked at this a few times, haven't we? I think it's interesting, this, from a longer term perspective, not so much for me from a trading perspective, but if we were going to pick up and chuck our little trends in, then they look something like that. And that's from 2017, late 2017. One share was about 68 euros, and they pretty much almost halved, traded as low as 37 end of last year. And since then, we've had this trend going the other way. So, for me, I'd be looking now. You could argue, okay, we've broken out through that trend line. It's arguably a recovery play, isn't it? And it's drifted off. It pushed as high as 49 euros. We've drifted back to 45. It's still in that trend. So for me, for like a punt for the rest of the year type position, a buyer at 45 now, and a stop arguably the other side of these lows from March. So the other side of 41. That looks like a reasonable risk reward. We've got, for a buyer at 45 with a stop the other side of 41, we've got just over 10% risk maybe. But if the thing actually recovers and stages a bigger recovery, maybe the initial target is a run back up to last summer highs at 56. There's $11 upside and maybe $4 or so downside from here. So I think that's an interesting one. BNP Paribas. Right, let's look at sterling Aussie is the other one. Of course, the Australian dollar, the Australian elections, they had a surprise result, didn't they, in the Aussie elections? I think the Australian stock market hit an 11-year high, I think. But let's take a look at what the Aussie dollar's doing. No, not much. By the looks of it. I thought we were going to have a bit more of an exciting chart then, to be honest, after these Aussie elections. So let's see what we've got. This is the pound again. We'll have a look at the Australian index in a minute. This is the pound against the Aussie dollar. So a bit of Aussie strength overnight. The pound, clearly the pound. I mean, it finished on Friday 185. So £1 was worth $1 AUD and 85 cents. Is it what they have? I don't know. I think it must be. So we've seen the pound weaken a bit. I think it's just, for me, it's just too much in the middle. I think we looked at this last week, didn't we? And I was saying I'd never look at it, but quite a frustrating market because it breaks out and then fails, and it breaks out and it fails, and we've seen the same thing again. So I think for me, where it gets interesting is if we drift back down to these lows from April around about 182. So let's see what happens. But it's a bit in the middle at the moment. Let's just have a look on a short-term chart and see what that looks like. There you go. There's the gap. That's last night's gap, 9 o'clock last night in Asia, where the pound gap's lower. So I'm presuming we're seeing Aussie dollar strength across the. Let's have a quick look at Aussie dollar, US dollar. Yeah. So again, gap up. So the Australian dollar against the US dollar ended at 68.65 on Friday. We've had that shock election win over the weekend, beating the polls, and the Aussie gapped higher on the news. Let's have a quick look at the Australian index, if we've got it. Australia, is it this? SP, there we go, ASX 200. I'm guessing that's the right one, isn't it? I don't know how much data we got. We won't have 11 years. But again, okay, there's the strength. So that is, moving very different to other markets. So pushing out to an 11-year high overnight as we have this election win in Australia. Right, KLM. Do we do KLM? No, we haven't got those, sorry. We've got Air France. So someone said KLM Air France. Is it Air France? Let's have a look at that. Let's bring that one up. It's quite interesting, actually. I don't know what you do here, but let's just pick up on this, because I think we've seen a bit of a trend change. Again, I must admit, it's not a sector I look at very often. You've seen there's lots of news about Thomas Cook, the travel company. Is it Thomas Cook or Thompson's? Can't remember. Over the weekend, it must be Thomas Cook, and the struggles they've got. But here's Air France KLM. There we go. It's that way around. So we had seen this recovery since July last year from about €7. Pushes higher, 12.60. I mean, that looked really strong. I would have been perfectly happy being a buyer in here at 10, based on how strong that was in Feb. But it's really fallen out. So again, I think the aggressive trade here, and not a trade, but a position. And of course, you can run sort of longer term positions with us if you want to trade CFDs. But the aggressive trade is to be a buyer with a stop the other side of these lows from October. So if we treated this as, okay, it's fallen out of this trend, but maybe we're going to recover at a slower rate of knots, perhaps that's the interesting thing here. But saying that, it has been a pretty dull week or so. But let's come back to it in a couple of weeks and see what's going on. But it'd be interesting to see if we see a bit of strength coming in down here. Proctor and Gamble, so the big US conglomerate. Proctor and Gamble. Here we go. Oh, look at that. That's what you want, isn't it? What a lovely chart for a Monday morning. So we've got a great trend. Are we near any big levels? It doesn't look like it, doesn't it? Look at that. Great trend. Breaks out. Bit of a messy breakout towards the end of last year. Breaks out through these old highs. Has a look. Falls back. And then bang. Breaks out here through 97. And away we go. So famous last words. You'd have to be a buyer. Or I would have to be a buyer. Because that trend has been so strong, you know, looking something like that. Clearly it's accelerated since then. There we go. So for me, as usual, the only question is, where's your stop going to go? You know, we broke out last week to what I'm guessing is fresh all-time highs. What's the closest you want your stop? The closest I would want it, the absolute closest, and I wouldn't do this, is below those lows from early May. I think a better stop is below those lows from late April at 102. But it's a dream of a share, isn't it, when it does something like that, or it just motors and then never looks back, and all you've got to do is just knock your stop up once a week or so, trailer stop behind it. But yeah, strong performer there, Proctor and Gamble. So I think, you know, for me, it would take a drop below at least 100, you know, what, 7% fall or so to change this trend at the moment. But a nice steady chugger there. Okay, and the last one so far is Tesla. So Tesla's dropped quite a lot in the last few days. Is it worth buying? For me, as a committed trend follower, I would not be a buyer personally. You, of course, can do whatever you want to do. But I think it's interesting, Tesla. We've looked at this a few times, and I do regret, actually, although I still might get an opportunity, is not getting short on this when it broke. Because I think, as much as I think, you know, they've clearly pioneered so much stuff, Tesla, and they have a very charismatic boss in Elon. You know, we've seen this big change in sentiment. You know, for the last couple of years, the Tesla share price has done nothing. We've traded in this wide sideways range, but 240 has been a floor for Tesla. We have seen buyers step in at 240 and see the shares as cheap. But over the last couple of weeks, this has changed. We've gone sailing through this 240 level over the last couple of weeks or so to trade out. So we're trading now at levels not seen for a couple of years, so more than a couple of years. And if we picked up on the trend for Tesla, it looks something like that. Lovely, lovely downtrend. So for me, and I think now, you know, I'm a big fan of what goes on in the car world, and I think, you know, as you know, clearly they've done so much to pioneer electronic vehicles, but I think they are going to continue to feel the squeeze as all the other manufacturers start moving in now seriously, I think, into this space. So I think it's going to be an interesting year for Tesla. I would be tempted. I think, you know, I think we've seen clearly a big move, a $50 move over the last couple of weeks. I think maybe in the short term the move down is overdone. If we get a squeeze higher, maybe back up to 240, I would be tempted to sell short and look for it to move lower again. But let's see. Let's see what happens. Let's keep coming back to this one. But from a pure trend following point of view, with it sitting on a 2-year low and that trend still down, personally, I wouldn't be a buyer just yet. But what do I know? I haven't got a crystal ball. But let's see what this week holds for Tesla. We'll come back on Friday and be trading at like $300 because he's tweeted something crazy or something. And silver, someone's saying silver. Silver's interesting, I think. Silver has been an interesting market. Let's pick up on this one. So if we went right back on silver, here we go, all the way back to those highs. I'm sure that was the royal wedding in 2011, whichever royal wedding that was, when they traded up to 48. The older brother, William. And they traded up to 48, nearly $50 in April 2011. And then since then, we've just been sliding lower. You know, unlike gold, we haven't really seen much in the way of the odd sustainable recovery. And I think you could say if there was if you picked up on the trends, maybe looking, I think because we looked at this last time around, if we picked up on that sort of move from 2016, so from nearly 3 years ago. And I do remember we looked at this earlier this year and thought, well, is this a valid breakout? And that second push higher did make it look like a valid breakout. But since then, bang, it's just, look at it, it's just gone. So it touched, 1620 in Feb, and now it's trading at 1440. So I think, and I would have definitely have bought in somewhere because that looked like a valid break. So I think what will be interesting on the price of silver is if it moves back towards those lows from wherever it is, November last year. So just shy, just below $14 an ounce silver. It's still weak at the moment. You know, it's pretty much on its lowest level since December. So we're on, what's that, 5-month lows, the price of silver. But I think where it's going to get interesting is if it moves a bit lower from here. You know, where would that put us? And we do have, you know, actually we've got to go right back, 2015 lows around about 1360. So this whole 1360 to 1380 area for silver is a pretty big historical one. So even though it's still weak, let's keep coming back to that, because maybe it will get a bit more interesting again during June, and we'll see some buyers come back in like we saw back then. So I think that's an interesting market. Okay, that's it for today. So we'll come back as usual and do this on can't remember, Wednesday, 10 o'clock on Wednesday. I think the push messages through our app, so if you're a client of ours, you should be receiving push messages for these. But the easiest way to get them, I did see a comment, I think it was David, you put a comment on our video last week saying you didn't get a push off YouTube. I think now and again, the YouTube pushes can be a bit hit and miss, but normally the best way of getting them, if you subscribe to the channel, if you're not subscribed already, and then click that alarm bell thing next to the subscribe button, you get a push whenever we go live. But the next expected one is Wednesday at 10. So that's it. A lot to watch today. Oil immediately because of the gap overnight, but also stock markets to see if they can hold above Friday's lows when the US opens. So an interesting day. We'll wrap it up there. Thanks as usual for coming along, and we'll do it all again on Wednesday.